Time now for the markets with Leighton, and updated crop numbers are out from the USDA.
Before the Thursday midday release, many traders spent this week tweaking their positions in the markets. Also in our headlines, a theory that global demand may pick up this year and stabilize soybean futures prices. The trade was expecting a production cut in the U.S. cotton crop in the new reports. And in dairy, cash butter prices jumped this week as supplies languish. As the U.S. soybean crop gets bigger, futures prices turn lower. Analyst Darren Newsom says the November contract is now dipping below $10. However, unlike some traders, he believes global demand will step in to save the day, so to speak.
Once we start to get harvest going, again, very similar to corn, we've got this record production supposed to be coming. That could be enough to push the November futures down below $10, possibly to $9.90, maybe to $9.30. After that, I think, again, global demand is going to step in, start to stabilize the market, and we could start to turn the corner back higher.
Ahead of the new reports, a number of analysts were looking for fewer bales of cotton in the updated U.S. production figure for this fall. On Thursday, Extension Ag economist John Michael Riley weighed in with his analysis of the cotton market. John Michael, it seemed like a lot of the trade was expecting a cut in production in this new report. Did that materialize?
It sure did. We're just getting the information in, so we'll be looking down quite a bit. But 16.5 million bales of production projected for this year. That's based on 9.9 million acres harvested, and they reduced both the acres harvested and the yield for the nation. Yield is currently projected at 803 pounds an acre, down from 820 last month. So a general reduction both in harvested acres and yield has led us to a 16.5 million bale production number. You carry that through 5.2 million bales of ending stocks, which is lower than last month. I think we're expecting a lower ending stock number, but it's even below those pre-report expectations. So we're seeing a bit of a positive bump in the market, but if you look, if you keep tracking this, December's already down a little bit compared to yesterday. It seems like it's a buy the rumor, sell the fact day right now.
And it did seem like leading up to this report on Thursday morning, that Thursday at midday, that the market did rally a little bit, or it seemed to kind of get a positive flow before the...
Coming into the report, for sure, the two things in play. Obviously, the report, number one, some pre-report trading, but also we've seen the dollar trending lower yesterday and today, which has helped ensure, that cotton prices worldwide should be a little bit cheaper. That's kind of in the face of what's been going on, a little bit more history there. The dollar value has been increasing for the past number of days, which has been adversely affecting cotton prices, but we have seen that change just yesterday and today.
Now, Thursday morning, we also had the weekly export sales report, and that we saw some cancellations in that for cotton.
That's correct. We've been seeing that as a result of this dollar impact, and of course, that's not being predicted in the World Ag Supply and Demand Estimates report, because that information is based on information as of September 1st. So some of this newer information is probably not reflected in this report.
And the carry-out, we could see a 3 or 4 year high in the cotton carry-out for this year.
Yes, indeed. Just higher. Still, at the end of the day, compared to last year, we're at higher acres and roughly equal production or yield per acre. So we should most likely will continue to see a higher ending stock number for this year.
It's National Rice Month, and we have a trivia quiz about this important crop for the state. And here's the question for you: how does Mississippi rank nationally in rice production? Is the answer A, number 2, or B, number 4, C, number 6, or D, number 8? I'll tell you at the end of the markets. A trace of renewed volatility has been seen the past week in the U.S. cattle markets. Many traders do seem to be thinking that the nation's herd should start to grow, and that's because they are reportedly seeing the start of heifer retention. Here's analyst Don Roos.
We are retaining heifers, and that's the one thing that is happening, and that's the final phase of a bull market, is when you start to hold back, retain some heifers. The same thing with the cow slaughter's been down. Those are both signs, and that's been the signal of the market. And it's just we've had droughts in different areas that's held this off. High price grain. Now we're here, good grass conditions in a lot of areas. I know not in California, but in a lot of other areas, the grass conditions have really improved.
It's seldom that we speak of the butter market in this segment, but roaring demand has it in the spotlight. Cash butter closed at a record level, just under $3 per pound on the Chicago Mercantile Exchange. Reportedly, the September 5th dairy market news sparked this market rally. That report says that demand continues to outpace butter supplies, with the biggest demand period right around the corner in the fourth quarter. Meanwhile, the USDA reports that total cheese production during July topped 950 million pounds. Now that is an increase of 7% on the year. Production of the American variety of cheese alone was over 9% higher than 1 year ago in July 2013. Before our feature story, let's check the trivia answer for this week. The correct choice is C. Mississippi ranks number 6 in U.S. rice production.